Welcome, it's denome. It's finally time to update my portfolio once again. We have a new year, new quarter, so this update will be for the quarter one of 2021, and I will be changing this as we go along the weeks and days going forward as well. But for now, I have made a lot of choices, a lot of updates in my portfolio, so I will go through exactly what I have done. And I will also give you the strategy for the early 2021 that I will be using myself going forward for this year. So without further ado, let's just get to the first asset that I have in my crypto basket. So the first asset is the biggest asset, which is Bitcoin. So as you probably know, the current institutional FOMO is real, and a lot of institutions are getting more and more Bitcoin. It is the store of value story right now, which is driving the price upwards. So this crazy money printing that is going on in the world, everyone is trying to save the banks, the businesses, as well as individual families from bankruptcy. So all of that crazy money printing going on, it hasn't turned into real inflation in the real market. But if you just compare, for example, interest rates have gained massive inflation. So if you want to have, let's say, $100,000 per year as interest through banking financial services, you would require about 8 times the capital than just a few years ago. So that's massive inflation in banking institutional finance assets. So Bitcoin is a hedge against all of that crazy money printing, as well as it still has a lot of potential upside. But although we are currently at about $40,000 mark here, so my personal goal is 100,000 Bitcoin, and after that I will have to turn quite bearish on Bitcoin. It can go up to 200,000 or even 400,000, but after 100,000, that's basically my personal mark that I'm currently using for this bull run, and after that I will have to start locking in more and more profits. But for now, Bitcoin is 26% of my portfolio, and the most important chart for me to look at for this bull run is how many Bitcoin are in exchange reserves, because as this stagnates or goes lower, it just means that people want to hold their Bitcoin more than to trade it. So as long as this is going sideways or downwards, I'm quite happy with this bull run, and I'm not expecting any significant downturn yet. So when I think this is a leading indicator in my opinion. As you can see, it was trending downwards for quite a while before this parabolic move even started. And as the price of Bitcoin goes higher, it just gets more and more exposure for retail investors as well. So all in all, I do still believe Bitcoin has really good upside, and it has frankly outperformed almost all the coins in the crypto market as well. So for that reason, most of my faith is in Bitcoin for the time being, for at least early 2021. Next coin is Celsius Network token. As you probably know, this is the native token for the Celsius Network application, where you can simply send your crypto assets and they will start generating yield immediately. And the more Celsius tokens you have in the application, the more yield you can get for Bitcoin, Ethereum, stablecoins, Pax Gold, and other coins as well. So the tokenomics are actually pretty good. The full amount of Celsius networks has basically been already released to the market. So whenever you receive Cel token as a reward, the company has to buy it back from the market and give it to the people. So the price just goes up as the crypto markets rise, because if Bitcoin price goes up, it just means that if you have Bitcoin, like they have more than 100,000 Bitcoin on the platform already, assets under management, they have to buy more Celsius Network tokens from the market and give it to the people. So it also brings the price of Celsius higher. So that's quite interesting how it works. So Celsius Network token gains more value as the crypto market rises, as well as the more active users they have on the platform. And they have been able to get about 3% weekly growth on the user base for the whole 2020 year. So I think that's pretty good, as well as the market cap is less than half of the assets under management that they have. So Celsius Network token is 20.2% of my total portfolio. As well as this chart here, you can see that the daily Celsius Network price versus the total net deposits on the application is that they're quite correlated, but now the price is actually dipped below this line here. So I do believe that current price, which is about 5.5 $5 is quite low for Celsius network. So I have actually been buying a little bit more, even though I was selling it already before. So I've been buying it back a little bit. Anyway, it's 20.2% of my portfolio right now. Next one is Orion protocol. And Orion, it's a coin that is used for the Orion terminal. And the terminal is just an aggregator service. So they aggregate trades on CeFi platforms, so Binance, KuCoin, other places as well as they also aggregate DeFi dexes, so like Uniswap and everything else. And I don't know any other coin or any other ecosystem that does both in one single terminal. So if you execute your trade in their terminal, you will get the best price of both DeFi and CeFi services. And this market cap is only $15 million. They're using the Elrond network, not yet. Their MVP, minimum viable product, is currently using Ethereum on the terminal. So they haven't released the terminal to many people yet, because as you know, the gas fees are just horrendous on the Ethereum network right now. So the terminal is not really working. It is working, and it is aggregating the prices from multiple dexes. So it is working, but they're currently using Ethereum. So in 2021, I believe when they're starting using the Elrond network, this will be one of the best places that you can actually execute trades in 2021. So for that reason, Orion token is one of my favorites for 2021, and it is 5.1% of my total portfolio as well. Next one is CRO, and this is because I have staked it a long time ago. So I have a lot of CRO staked on their exchange. They have made many mistakes on 2020, most of which I would not complain about the MCO CRO swap, but mostly that they have introduced products like Supercharger, which took away the earn plans on CRO. So it's just like they've created multiple competing services for their own token, but the tokenomics haven't really changed. So it's just like they have made it more complicated for the users. And in January 30, the MCO to CRO swap, a lot of people, the users who had staked swapped their MCO into CRO token, they had to lock it for 6 months on the exchange staking, just as I did. And the first stakes are unlocked on January 30. So I'm expecting a lot of bearish action on January 30 to about 4th of February. I think that's when most of the unlocks have already been released. And I do believe many people will be selling their CRO stakes from that situation. But after that, it could change. And the reason why this could still become a good token in 2021 is because of Google. So if you Google the word cryptocom is the number one recommendation that you will get. So if retail people want to get into crypto and they search it, crypto.com is the first place that they will actually be exposed to. So that is basically the only reason why this token has value, but the tokenomics are total disaster. So when this exchange staking releases for myself, I will be looking to sell it, but depending on the price when I can sell it, let's see if I can sell it at a good price, of if this will tank more. But after the sell-off has done, that would probably be the bottom for CRO as well. So I'm not bullish for CRO in 2021 early, but I'm just telling you that I have 4.6% of my assets in CRO just because I staked it a long time ago, and I get it back in February as well, or my assets are unlocked in February. Anyway, I do have 4.6% in CRO. Next one is TrustSwap. So TrustSwap, they facilitate quality pre-sales, and the pre-sales that you can participate if you stake swap have done about 1.5x to 4x since they have been launched. And if you stake swap, you are eligible for these pre-sale coins. So that's pretty neat utility for the token, as well as if you stake swap, you will also earn fees that they generate on their platform. So token utility, they have designed it in the core of the system. So that's why I like TrustSwap, is that they are always focusing to bringing more value for the token holders and for people who stake swap. And that's why I do believe that this $51 million market cap coin has a lot more upside, even though it is working on the Ethereum blockchain. because they are working with pre-sales, a lot of people will be wanting to put more than just $500 or $1,000 into the pre-sales, maybe $2,000 or $4,000 or $5,000 or more into these pre-sales. So for that reason, I don't believe that staking the Ethereum gas fees are as big of an issue for TrustSwap as they are for some other DeFi platforms out there. So TrustSwap, I was considering selling it, but just this market cap and the actual service that they give is just so valuable that I do believe that they could even go 10x from here during this bull run. So for that reason, I'm still holding my swap tokens, and swap is about 4.5% of my portfolio still. Next one is SXP, and this is basically the leftover because my card application was rejected. So when my swipe crypto debit card application was rejected, I was able to sell most of my SXP tokens. So what I have left over is the tokens that I wasn't able to sell before this price dipped here. So I'm currently looking to sell most of my SXP here back into stablecoins and then looking for more opportunities. I will probably ride the wave a little bit higher here as well, because I do believe that it still has potential for 2021 as well, even though it has performed quite badly after it was $5 here and went all the way below $1 here. So the potential for this is still there, but definitely it was a letdown for 2021. So that's why I call it a failed peak, because I was expecting it to move much faster than it actually, it still hasn't moved yet. So I do believe it still has potential for 2021, but I'm not buying more of SXP. It's just the leftovers that I have after they rejected my card application. So currently I have about 4.3% left of the SXP that I haven't sold yet. So that's my portfolio there. Would I recommend SXP? I don't know. It could be. It has potential for sure, especially when retail folks are coming back here, as well as they are burning currently most of their SXP supply, because SXP is fueling the Binance card. So if you get the Binance card, it will burn SXP tokens whenever you use your Binance card. So currently they are burning about 50,000 SXP per day. So for that reason, it could have potential for 2021 because it's quite deflationary in the pace that they're currently using. Anyway, personally, I'm not buying more. It is what it is. I had it. I'm gonna stick with it and waiting for a little bit higher prices and just gonna sell it as well. Next one, and this is probably my best pick for 2021 as well. This is Band Protocol. I have talked about it in the past as well. It is cross-chain Oracle, and the big reason why I like this is that the tokenomics are at least decent. They are not great, but they are not bad either. So they are decent. But the great thing about Band is that the team just delivers all the time. So they are creating new partnerships on a weekly basis. And the most recent partnership is that they are bringing the price data for CoinGecko. So if you have ever used CoinGecko, in the future, they will be using Band Oracle to actually provide that price data. So I don't know why they chose Band, but this team is just delivering all the time, as well as you can use this on Polkadot ecosystem, you can use it on Binance Smart Chain, you can use it on Ethereum, you can use it on Silica, you can use it on all the other blockchains out there. So for that reason, the market cap is currently about 1/50th of the market cap of Chainlink. So for that reason, this could be the best pick of 2021 as well. So this is 4% of my portfolio, and I do believe that it will or it has the potential to bring good rewards. And one more reason why I like this is that it is in the crossroads of the whole DeFi ecosystem. So if you are bullish on DeFi, this is a critical building block for DeFi as well. So if you have Band Protocol or Chainlink, you are basically capturing the value from the whole DeFi movement as well. And because this is cross-chain, I'm not limited on the Ethereum network. And I'm not only betting on Ethereum network to succeed, I can bet on the whole DeFi in any blockchain out there. So for that reason, I like Band Protocol a lot. Next one is Ethereum. And Ethereum, I think it could be overvalued. We're currently hitting almost all-time highs from before. And basically the number one reason why I'm saying this is that if you want to make a swap on DeFi right now on Ethereum, the gas fee is $81.93. So this is just completely insane, and this will not create adoption at this pace. If the price of ETH would double from here, this price that I would have to pay for a single swap would be $163 and not $82. So for that reason, as the price of Ethereum goes higher, it is more bearish for the whole network. And if you are running a DeFi coin on the Ethereum blockchain, your dApp or application will become harder to use because your fees will double if the Ethereum price doubles. So being bullish on Ethereum just doesn't make sense for me because this fundamental use of Ethereum is getting worse. So some people are saying that, okay, Ethereum is also going for the store of value proposition that Bitcoin's already dominating, but I don't know if it achieves that. All the dApps on the Ethereum blockchain will become useless because you cannot use those. And the layer 2 solutions are only going to be available in full speed, maybe Q2 of 2020. So from here to Q2 of 2020, it's 3 months. So during that 3 months, I don't want to hold Ethereum because I do believe at some point, people will start picking this up like, hey, I don't want to use these DeFi applications anymore because it's just so expensive. And for me, I'm no longer really using these DeFi applications anymore myself. I'm only using CeFi right now just because these gas fees are so unsustainable, and I don't want to pay $80 for a $1,000 swap. So for that reason, I'm not currently using Ethereum. And the only reason I still have some Ethereum is because I have provided liquidity for Ethereum and Orion on the staking protocol, where I can get about 80% APY just by staking my funds there on the Orion. So for that reason, I still have a little bit ETH, but I have sold most of my ETH, as well as I have sold most of my DeFi coins that are running exclusively on the Ethereum blockchain because just the gas prices are so crazy. And the competition, to be honest, is just getting better. So like if you go to Binance Smart Chain, you have to pay about a fraction of a penny in dollar terms for the same swap that you can do on Ethereum, as well as a lot of the dApps have actually already transferred to Binance Smart Chain or Tron Network or Matic Network. So for that reason, I'm just much more bullish on the competition of Ethereum than Ethereum. So for that reason, I generally don't want to hold Ethereum at this point in early 2021. So that's my reasoning there. And the only reason I added this here, this is not even my, number 6 or 7 pick, but I just wanted to add it here to explain fully why I currently don't want to hold Ethereum going for early 2021. Next one is actually stablecoins. So these are the stablecoins that I currently have. So I have USDC, I have USDT, and I have Pax Gold. And this is basically just to hedge against USDC because USDC, our USD, has actually lost a lot of value during 2020 because of the crazy money printing they are doing. They're doing more money printing than other nations compared to them, as well as the petrodollar is actually losing its position. So United States dollar, most of its value is because debt outside United States is nominated in US dollar, as well as the oil. Whenever you buy or sell oil, you had to do it in United States dollar, but they're now losing its petrodollar status. I think already more than 50% of the total oil trade is done in other currencies than US dollar. So for that reason, US dollar is super bearish in my opinion. So in order to hedge against that, I also want to hold some Pax Gold. But just because USDC is easier to convert into crypto whenever I see decent dips, that's why I want to hold USDC as well, and USDT as well. And others, these are other stable coins like USDN, as well as I have invested stable coins into some random startups as well. So I just put it here as well. Just small investments that I did as well. So anyway, stable coins are about 19% of my portfolio. And going into 2021, I will be keeping this ratio about 20%, even 25%. And when I start to expect more downside, or when I start to think that the markets are getting too overheated, I will probably ramp this up to 50% stablecoin ratio at some point. So keep in mind that these ratios will always be in change as well. And other coins that I currently have, let's go over them. Other altcoins is only 10.5% of my portfolio, and these are the altcoins that I currently hold. So I hold EFX, I hold Polkadot, as well as Tron Network. And this Tron Network, by the way, this is not a hold that I'm holding for long term. I bought it basically yesterday or the day before, and I'm just looking to flip it because the Tron price looked quite decent. As well as if you look at other layer 1 and layer 2 blockchains, most of them have already pumped, but TRX hasn't pumped yet. And the volume has actually been rising. So for that reason, I bought some TRX just as a short-term trade. So that's the reason why I have here. Polkadot is a little bit longer-term trade for me, but I have already sold some of my DOT. So that's why it's only 2 to 3% of my portfolio, because it already pumped. And other coins I have is Sol, BNB token, DOS Network, Stake or XDAI token, Limit Swap. I still have some of those, as well as SWTH tokens. I may have some other tokens that I forgot about. I'm sure I find them somewhere, but I have so many services that if I have some other coins, they are probably not that significant. So these are basically all the coins I have in my portfolio. So now let's talk about the strategy for 2021. I already covered a little bit of the strategy, but number one is 2021 will be the game of chicken. So if you know the game of chicken, it is basically that you are running or driving a car against another car, and the chicken is the person who first moves away from the other car. So the game of chicken just means that as the bull run continues, it will probably get overheated at some point. So the game of chicken means that people are looking to exit this market as a winner, and they don't want to suffer the losses. So the strategy for 2021 just means that most people, professional traders, professional investors, are looking to exit this market, and you don't want to be the one person holding the shitcoin bag or basically any coin bag if and when the market turns bearish again. You don't want to be the one holding the XRP bags that have just lost 95% of their value since their all-time highs from the previous years. So 2021, I have to be super careful to look at the market signs and to exit whenever I start to see weakness. And also one of my strategies is to gradually keep selling my main coins as the price goes higher. So you've probably seen the video where I talked about the best exit strategy. So those are basically the levels. Whenever Bitcoin or any other coin goes up about 50%, I am selling my band, I am selling my other coins as well during that time. And when I start to see weakness, that's when I will be selling even more than the 20% every 50% intervals. Next one is I will be flipping layer 1 and layer 2 blockchains. So as you probably know, I had Cardano as a pick a few weeks ago, and Cardano already made almost 100% gains from there. I sold most of my ADA. I still have it somewhere. I forgot to put it here, of course. Yeah, ADA, I forgot to put it. I don't have much. It's only about less than 1% of my portfolio. Maybe 0.9% of my portfolio is ADA. I forgot to put it here. Sorry, guys. Anyway, I had ADA. After it pumped, I sold most of it, and then I moved into TRX. So you can look at these ratios if you go to TradingView and you type TRX BTC/ADA BTC to see which blockchains are undervalued compared to other blockchains out there. So I will be flipping these blockchains back and forth during at least early 2021 when it's not clear which one will be the winner. So that's a strategy I'm gonna do here. If you don't want to keep flipping and trading small short term, what you can do is just diversify between basically Polkadot, Matic Network, maybe XDAI definitely, as well as Cardano. Yeah, you could have other ones like Binance Smart Chain as well. That could be an interesting one. Elrond Gold and Zilliqa are also pretty great. So I'm just looking at all of them, and I'm trying to flip and buy those which I think are undervalued compared to the other ones. That's basically my strategy. You can use a different strategy, but that's my strategy for early 2021. Next, I will be keeping an eye out for Polkadot, XDAI, and Cardano blockchains in specific, because Cardano, they are releasing their own Ethereum virtual machine on Cardano, which means that any project out there can deploy the same Solidity code they're currently running on the Ethereum blockchain and just copy paste it on the Cardano and run the same application on Cardano network. And that should go live somewhere during March of 2021 as well. I don't exactly know the details. It's probably not that easy that I just described here, but if it is at least relatively easy to hop over to Cardano, that could bring a lot of adoption for Cardano in its early stages. But for now, Cardano only has like 1 or 2 projects outside the Cardano Foundation building on Cardano. So for that reason, I'm still not long-term bullish for Cardano. I want more projects actually hopping onto Cardano. But Polkadot, they have more than 250 projects already working on Polkadot testnets. So if you just compare Polkadot and Cardano to each other, in that sense, Polkadot is a much clear winner, as well as Polkadot is already building on the Ethereum network. So most of the Polkadot coins you can already buy on the Ethereum network. And when Polkadot goes actually live in Q1 of 2021, so quite soon, they will be able to hop over to Polkadot immediately. And they have basically the same market caps as well. So Polkadot looks like a better deal as it is now, but it is not certain which one will be the winner and which one can actually scale and which one will be easier to use and so forth. Polkadot as a name is terrible, by the way. Whoever found out this name should eat their hat or something. This name is complete trash in my opinion. It just makes me feel like it's like a second quality polka. You know polka, the song, or I don't even know how those songs go, but anyway, Polkadot, the blockchain is fantastic. It's a genius, but the name is trash in my opinion. Anyway, I don't care about the name. I care about the gains. And the last strategy that I have for 2021 is to keep eye out for regulations and bans. And the next big date for a regulation is actually on 15th of January. That's when USDT or Tether has to submit documents verifying their proof of funds. So Tether and Bitfinex, they basically did some funny stuff back in the day. I don't even remember the year anymore, but basically there's a chance that they counterfeited $850 million. So if that happens, USDT could be regulated as a security, as well as the leaders could go into jail because of that. So I'm really keeping a tap's eye out for that as well. And I think it was Peter McCormick I think it was Peter McCormick. He's interviewing the USDT guys on a podcast, and they already recorded it on Wednesday, but they haven't released it yet. So I hope to actually look for that podcast when it is released. And when it's released, if there's any new information, I will probably make a separate video out of that before the regulation actually hits the market. So I want to know what the USDT guys actually say about the FUD, because they said that they will be addressing the USDT FUD in that podcast. So we'll see how that goes. But this is basically my strategy for 2021 as well. So now you know my portfolio. Everything I just said is subject to change. Anything could happen. The next big things are the regulations that are coming, as well as Optimism Layer 2 solution layout is supposed to be rolling out in early January. I think it's also on January 15th or something like that. So I will be looking out if that Optimism rollout Layer 2 solution for Ethereum actually works out. But a big problem for these Layer 2s for Ethereum is that let's say you have a dApp that actually works on Layer 2. Let's say you use Optimism or Optimistic, ZK Optimistic, something like that. If you use that one, it's basically you create a new token on a new blockchain and you can use the application. But if you want to go back to Layer 1 Ethereum, you basically have to make a transaction back to that blockchain. But if you actually, another dApp uses Matic network, you have to hop into Layer 1 Ethereum and then to Matic. So using Layer 2s is not exactly ideal. And for that reason, Layer 1s are actually quite good. So anyway, I'm keeping an eye out for the Polkadot ecosystem, Ethereum, XDAI, Cardano. But yeah, that's basically my strategy for 2021. And also just holding the coins. So even though this is the game of chicken, I'm going to have a more casual approach to 2021 than I did for 2020. So less flipping, less altcoin hunting, and more just holding Bitcoin, Celsius network, and the main coins, Band protocol, and so forth. And yes, gradually selling those as well. Anyway, that's it for this video. I hope you liked it, and I will see you on the next video.